How to calculate the EMI on your personal loan. Your financial requirements don't always show up when you expect them to. In fact, you can find yourself in need of money when you least expect it. In the past, this meant you had to go see the moneylender. Today, personal loans takes care of all such financial needs. Personal loans are useful for many things, from debt consolidation to taking your family on a dream vacation. But they are personal, which means your reasons are yours. Whatever be the need, getting a personal loan is easy. Moreover, unlike home and auto loans, which require you to use the money for specific reasons, personal loans don't have the same restrictions. Instead, as long as it complies with the conditions laid out in your loan agreement, you can utilize a personal loan for nearly anything. So if you're thinking about getting a personal loan, more than anything else, you need to first understand how the EMI system works and how exactly it is calculated. I'm here to decode all the jargon of the financial world. Today we will show you how you can easily calculate your EMI while applying for a personal loan. Please stay tuned till the end of this video and don't forget to like, share and subscribe to our channel. Now, personal loans are usually considered as a type of unsecured loan, meaning you aren't required to offer collateral security. Hence, there's nothing for a creditor to seize if you fail to repay the amount, thereby increasing the risk factor. That's why they carry a rather high interest rate ranging anywhere from 12 to 20% at times. I'm sure your main concern will be the EMI that you will be required to pay. Don't worry, there's an easy solution, or rather calculator, that will do the needful for you. Almost all the banks and the NBFCs now have an EMI calculator on their website, and it's very simple to use too. IIFL Finance offers personal loans at attractive interest rates, and they have a very smooth interface on the site that can help you calculate the EMI at your fingertips. This calculator also helps in estimating the loan amount you are eligible for. This is given your monthly income. Plus, you can also apply online for a personal loan. To calculate EMI, you will be required to enter three numbers. 1. The personal loan amount that you are planning to take. 2. The time period you plan to repay the amount. And 3. The rate of the interest. So why are these three factors so important, and how do they impact your EMI loan amount? This is the main variable used to determine the EMI for a personal loan. The monthly EMI increases as the loan amount increases. It is suggested that you choose a loan amount that you actually need in order to prevent financial strain from the EMI installment. Now, loan time period tenure is the time that you get to repay the personal loan that you have taken. The EMI amount decreases as the tenure lengthens, since it is spread out over a longer period of time. The rate of interest. Now, the rate of interest is the next element that influences the EMI calculation after you've selected the personal loan amount and loan term. Your credit score, income turnover, and capacity for repayment are taken into account. How to use the personal loan EMI calculator on www.iifl.com/personal-loans. Input the loan amount, tenure and interest rates in their respective sections, and you will get to know the EMI amount then and there itself. Let's say you want to take a personal loan of 3 lakhs and are planning to repay it in, say, 2 years at 14% rate of interest. Now you can see that your EMI will be 14,404 rupees for 24 months. So by the end of 2 years, you would have paid an interest of 45,693 on the 3 lakh loan amount. Now let's say you won't be able to pay 14,404 for 24 months and would rather extend the tenure to 3 years at the same 14% interest rate. Though you will be paying a lesser monthly EMI of 10,253 for 36 months, but by the end of the third year, you would have paid an interest amount of 69,118 rupees on the same loan amount of 3 lakhs. In case you decide to get rid of the loan at the earliest, meaning you want the loan for a period of 1 year and you don't mind a higher rate of interest, say 17%, then your monthly EMI would be 27,361 for the next 12 months, and after 1 year, you would have paid an interest amount of 28,337 rupees, which seems fairly reasonable but at a higher EMI. So there you have it. You can easily calculate the monthly EMI depending on different scenarios by varying the three prime factors of loan amount, tenure, and rate of interest. The rule of compounding is used in this calculation. So the longer you take to repay the loan, the higher will be the interest amount you repay the lender. The IIFL Personal EMI Loan Calculator is fairly simple to use and has multiple benefits. It informs you of the precise EMI amount you will be required to pay for a given loan amount. Utilizing this knowledge, you can determine the maximum loan amount you can take out without endangering your financial stability. With prior knowledge of monthly EMI amounts, you can manage your monthly budget and finances effectively without defaulting on the repayments. This calculator is accurate to the very last digit, and any ambiguity has no place at all. You can compare the EMIs for different loan amounts and apply for one that works within your budget. This calculator is completely free to use and as often as you need. You can tweak the parameters and enter a loan amount, tenure, or interest rate based on your preference. I hope I have managed to ease out the entire process of calculating EMI on a personal loan. If you are keen to know more about personal loans, do check out our videos where we explain the process of applying for a personal loan for a salaried person and also how to get a personal loan with a low CIBIL score. If you have gained insight into calculating EMIs after watching this video, do hit the like button at the bottom of your screens and share it with your friends and family. And lastly, don't forget to subscribe to our channel for more such videos.